It's astounding how our government plays this risky game of chicken that could have dire consequences for our economy, and as always, the cryptocurrency world, particularly Bitcoin, is keeping a watchful eye on the chaos. Hold on to your hats, there's more turbulence ahead. This time, our government narrowly dodged a bullet with a short-term spending bill that keeps the lights on for just 45 more days. It's a classic case of kicking the can down the road, and it's a dangerous game to play. But what happens when that can finally hits a wall on November 17th? Are we ready for the fallout? One major concern is the U.S. government's credit rating, which recently took a hit. One of the big credit rating agencies, Fitch, downgraded the status of the United States from the highest AAA to AA+. This downgrade was a warning sign that our government's financial health is in question, and it's not the first time. The U.S. has faced credit rating downgrades before, and it's a signal that financial markets and investors take seriously. So, what's causing this downgrade? One significant reason is the recurring issue of government shutdowns. In the past decade alone, the federal government has shut down 3 times, causing disruptions, headaches, and costing American taxpayers nearly $4 billion. It's a costly game that needs to end. If a government shutdown were to occur on November 17th, the impact on the economy would be substantial. Ordinary citizens across the country would have less money to spend, leading to a ripple effect that could affect businesses and livelihoods. Imagine the consequences for federal employees who would get furloughed, meaning they're temporarily laid off and their paychecks are delayed. Essential services like air traffic control or law enforcement would continue, but employees might not get paid immediately. National parks might close, and some government services, such as trash collection and passport offices, could face even more delays. The list goes on, and it's a bleak picture. Now, here's where it gets interesting for Bitcoin. Bitcoin doesn't need government approval or votes to decide its monetary policy. It operates independently. And this is why we're witnessing its stability during these uncertain times. Bitcoin spot trading volume has dropped to a 6-year low, indicating that more people are interested in holding onto their coins and believing in their long-term value rather than selling at the first sign of profit. This resilience is noteworthy and suggests that Bitcoin is becoming a haven for those seeking alternatives to traditional assets. Moreover, Bitcoin's price is showing an intriguing correlation with its 200-week moving average. Historically, when Bitcoin's price dots are purple and close to the 200-week moving average, it has been an excellent time to buy. We're currently in that territory, suggesting that it might be a good time to consider Bitcoin investments. Despite the uncertainty surrounding the economy and potential government shutdowns, 2024 holds several bullish catalysts for Bitcoin. These include the possibility of a spot Bitcoin ETF, potential rate cuts, U.S. debt buybacks, stimulus packages, an election year, and another Bitcoin halving. These factors could drive Bitcoin's price higher, providing a safe harbor for investors in turbulent times. In conclusion, we're stuck in a cycle of government dysfunction that's jeopardizing our economy. The 45-day extension is a temporary fix, and we need a long-term solution to prevent these recurring crises. As for Bitcoin, it's emerging as a beacon of stability and an attractive investment option during uncertain economic times. But the question remains, can our government break its bad habit of shutdowns and regain its perfect rating? The future remains uncertain, but as always, we'll keep you updated on the latest developments. Like and subscribe to our channel now to stay informed.
Before you go, help us by smashing that YouTube like button. And subscribe to this channel, so you won't miss any of our videos. This shows YouTube algorithm that you value our information. And it helps us spread the message. Sharing is caring.